Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles. We're going to talk about the ES, which is the S&P 500 futures, the NQ, which is the Nasdaq futures, and what they do today. We are focused on the market as an auction process. Basically, we are trying to figure out where is the market most likely to go next. Is it going to go up? Is it going to go down? Or is it going to go sideways? We do that by finding particular levels along the price action where certain business is likely to take place and then monitoring to see what happens when we get there. Okay, so the first levels of interest for me this morning is going to be the overnight high, which we're just about to kiss right now at 5,500, and yesterday's high at 5,493. Okay. If the market's able to get above 5,500 and turn that into support, this will be a gap and go this morning, which is bullish. If the market is able to get to yesterday's high at 5,493 and then it turns that into support, that is also a gap and go, which is bullish. But if the market fills the gap, if the market gets down to yesterday's regular trading hours high, and it cannot find support, that increases the odds the market needs a larger pullback into yesterday's range. Okay, so those are the levels I'm watching, the overnight high and the previous day's high, to see what happens there. Depending on what I see, I will be bullish, bearish, or otherwise. Okay. It looks like both the ES and Q are opening with a gap up this morning. So that is both markets showing a little bit of bullishness. The NQ is already above their overnight high. So that is two checks for the bullish box, right? The first one is the gap up. The second one is the move above the overnight high. The final check that I need to see in order to be bullish on the NQ to keep this going would be that they come back down to that overnight high around 18,775 and they turn that into support. Basically, they stay above the opening price at 18,762. If they can do that, if they can come back down, turn it into support, I will be bullish for continuation higher today. If they come back down and they pass back through that opening price again, they will almost certainly fill the gap. And then we'll have to see if we get support at yesterday's high. Okay. So the Q is looking a little bullish. Can they hold it? All right, ES, on the other hand, could not turn their overnight high into support. They have passed back through their opening price, so they are likely going to fill the gap. The gap for the ES, once again, is to 5,493. Once they get there, we'll be seeing if they get buying or not. If they get support at 5,493, we are bullish for continuation. If not, we are neutral and looking for a pullback into yesterday's range. Remember, these markets love to gap and chop. What that basically means is they will just keep grinding back and forth and back and forth and back and forth through the opening price, sometimes for up to an hour before they make whatever bigger move they're going to make. So that is the third possibility and one that we must consider. We can only truly trust support at yesterday's high or support at the overnight high. We got 91 people hanging out. We only got 20 thumbs up. We are on the public YouTube. So if you wouldn't mind smashing that thumbs up button, I sure would appreciate it. They might send us some new souls to learn about the auction process. Good morning to Will, Percy, Jay, another day in paradise. Nap is here. Willie T, good morning to you. Mateus, already liked it. Thank you. Nora's here. Danny G. Rick New, good morning to you. Nunez says, Charles, in your experience, and if such level even exists, where would you say there is the least amount of chop? Previous day's high or low session, open or other? Where is the least amount of chop? That is a great question. I don't know that there is a level where there is the least amount of chop, but I would say a gap and go that doesn't fill the gap. So obviously that's not the case this morning as we are about to fill the gap. But if we'd opened, immediately pushed above that overnight high, and been able to turn that into support, those are the days where the market will start trending immediately, like within the first few minutes of the day, and that trend will often last for hours. So yeah, it's not necessarily about a particular level where you don't get chop, but it's about particular market behaviors. That behavior, getting a gap up, getting support at the overnight high, and then immediately going, that is a potent combination of squeezing any shorts from the previous day and bringing in new buyers and keeping the buyers from the overnight market because they don't need to take profits yet. So that's like everyone's trying to get long at the same time, and that can create momentum that lasts for hours. So yeah, that's the most bullish scenario. But those are less common nowadays. What's more common is the gap and chop, unfortunately. Blame AI. That's what I say. Ken says, Q, please. Let's take a look. Okay, so the Q could not hold support at the overnight high. They passed back through the opening price. So the Q as well as the ES is likely to fill the gap. There it is as we speak. They just filled that gap. Actually, they have one more tick to go. There you go. Now the gap is filled. So now is the ever important question. All eyes are on the ticks to see, do buyers step in here and start to reverse the market back up? If the buyers can bring in support and pass back through the opening price to the upside, that will be bullish to see. If they can't, that will be bearish. If you were watching the morning show this morning, you already heard me explain this, but I'll just run through it one more time. On a daily time frame, let me actually zoom out to the daily. On a daily time frame, we have momentum down. Okay? Yesterday's day was an inside day. So that could mean one of two things. It could mean either the market just needed to spend a day cooling off before it continues lower, or it could mean yesterday was the first day of balance, in which case we would expect the market to either go sideways in the days ahead or reverse and start to head back up. So this moment right now at yesterday's high will tell the tale. Support here means we're bullish and we're going up. A failure to bring in buyers here, A failure to bounce the ticks off the zero line is a sign that we're either going sideways or still going down on the daily. Neither of those are bullish to see. So this is it. The buyers have got to step in and get the markets back through the opening price if they want to keep the momentum going. Can they hold it? Good morning, UGO, Stephen W., Michael R., Felipe, UGO is GeoCap. Geo, you're confusing us. 230, welcome to you. GeoCap says, Charles, we are in the previous gap. Do you have any history with price or with what price may do within a recent gap that was filled? Gaps are just levels the market can pass through very quickly. I don't know which old gap you're talking about. Yeah, this one, the gap up. So no, I don't really take that into account. The market has passed through there multiple times now, so anything can happen. I am focused on today's gap. It's really that simple. They hold this support, which right now they are. It's momentum, and the market's going to keep going up. You're going to squeeze any sellers that have been shorting this morning, and you're going to start to get FOMO buyers chasing price. And that's the only thing that matters to me as a day trader today. Good morning to Shriknath, Stephen W. He says, icebergs this AM. I'm not even watching Bookmap, to be honest with you, because I'm more focused on momentum, right? Gap ups are momentum. That's what matters. But let's take a look. Oh, yeah, icebergs on both sides. You know what that means? Gap and chop, baby. Gap and chop. Choppity chop. That's okay. We can handle it. We got this. Ken, good morning to you. Debbie B in the house. Grizzly Bowl is here. Ryan says, I don't believe I've ever seen this tick chart. What is it? So it is ticker symbol TICK. And it basically, it measures, oh man, I can't remember exactly what it measures. I think it's the number of stocks going up versus, the number of stocks up ticking versus the number of stocks down ticking in the NYSE. So essentially when it's above the zero line, you can see the zero line is right here. There are more stocks going up than down. When it's below, there's more going down than up. And you can see the way it moves that is showing you the changes over time. So if it's moving up, more and more people are buying stocks. If it's moving down, more and more people are selling stocks. And the reason that we look at that is because it's a confirmation that what we're seeing in the futures is going to get follow through. So far this morning, what has happened? They came back down towards the zero line and they bounced. Right when the ES came down to the previous day's high and bounced. So we are seeing that there is buying happening, which is increasing the odds that this momentum can continue. Okay, so we now just passed through the opening price. That is bullish to see. Okay, so again, imagine you're a seller this morning. The market opened, it pushed above the overnight high. You started shorting and shorting and shorting and shorting. If you didn't take profits at the gap fill, you're probably starting to get nervous right now, aren't you? Okay, most of those sellers would have taken profits. So right now it looks like gap and chop, but it is leaning more bullish to me. Keeping an eye on those ticks. Do they bounce on the zero line? I'm talking about a gap and chop, baby. Danny says, would that be a chop zone between those iceberg orders? No, because gap ups are opportunities to trade. So chop zone means there's no opportunity to trade. We have no edge. We have no idea what's going to happen. We have an edge when there's a gap up, right? Now, it may chop for a while first before the trade plays out. We may still get chop, but we can trade it because we have an edge using momentum. I go over all of this and more in my Mastery of Markets and Minds workshop. If you are thinking about taking the workshop, you've only got a few days left to sign up. It starts on Monday, next Monday. Head on over to marketsandmind.com. There's a link in the section below. Also in the comments. Okay, so why am I fixated on these ticks? Because we are back at the opening price. This is the moment we should start to squeeze sellers and start bringing in new FOMO buyers. If we're going to get that momentum, we should see a bounce on those ticks. And we haven't gotten it yet. Waiting for that wick and the ticks to pop back above the zero line. Right now, it's still saying gap and chop. Rick New says, will the Mastery of Markets and Minds day recordings be uploaded at the end of the day? I can't join the first day, and I'm scared I will miss one context for the day ahead. That's a great question. So on the first day, yes, I will get the video up. After that, sometimes it takes me like 2 days to get the videos up because I'm lecturing all day. After the lecture is over, I go through and edit the video. So I don't just post them raw. Because sometimes, there might be nothing to talk about during the live market at the end for, 20 minutes or whatever. So I go in and I cut those sections out so that, a 4-hour lecture in real time, when you go back and rewatch the video, will only be, 3 hours or something like that. I'll have taken out any wasted time. Also, if people ask questions that are kind of random and they don't fit the lecture, I cut those out. So you got to give me a couple days to edit those and get them uploaded. But on the first day, yes, I will get it uploaded right away. Okay, so we're back at the gap fill, watching those ticks. Do we get a bounce? And the reason is because the first day is the only day you have to watch in order. You can, the whole rest of the course, the days are completely self-contained, and you could watch any day in any order and it would be fine. But the first day is what gives you all the information you need for the rest of the course in terms of the vocabulary, what do things mean, and so on and so forth. So you do have to watch the first day first. But from that point on, you can miss a day and it won't affect anything. Okay, I'm still bullish. We're back inside yesterday's range, but what did those ticks just do? They bounced. So that tells us there are buyers waiting inside yesterday's range and sellers taking profits at the gap fill. So more gap and chop on the ES. Don't like the taper at the high or the low. Chop, chop, chop. The market will go. Okay, so now what I'm laser focused on are the ticks right here. We got a bounce, but now they're starting to drift back down below the zero line. So I want to see those get back up to zero and hold to stay bullish. And I'm also watching the opening price now. If the opening price becomes resistance a second time, which it just was the last time, I will be neutral. Because at this point, the buyers need to get through that opening price if they want to keep the momentum going. If sellers start to pile on again at that opening price, they're going to go lower this time. Okay? So this is the moment of truth. The tick's got to hold, and we got to pass through the open, not turn it into resistance. Let the tug of war continue. I would say same thing for the NQ, but the overnight high. They got to get above it and not turn this into resistance if they want to keep the momentum going. DNK says, is it still a big news day today? Other than the debate, I don't really think there's anything exciting happening today. You got a Fed speaker in about 6 minutes. Sometimes that adds some volatility. Yeah, I don't think there's anything super exciting happening today. But you know what is happening, at least as of now, a gap and go. Can they get back through the opening price? DNK says, well, Trump on the mic is enough to keep out of the market. Maybe as a swing trader, that's a fair statement, but it won't affect the day trading today. Good morning, Fighter Pilot. Fighter Pilot and Nap say we got CPI tomorrow. That'll be important. Okay. So, tricky. We are getting that move through the opening price. Bullish to see. This is a gap and go. Bullish to see. But those ticks, they're not confirming it. Not yet. So that's a reason to have caution. And then I'm remembering that we have that iceberg at the high. So I'm saying to myself, I want to see what happens with these icebergs up here. There's now 2 of them. Once those disappear, I can feel much more confident on the long side that we're going to get continuation. But as long as those are there, gap and chop, which means we keep passing through the opening price. Oh, yeah, look at all the icebergs at the low. Oh, it's going to be choppy. And even if we didn't have Bookmap, we had the ticks telling us to be cautious there. But Bookmap just confirms it. It's computers, y'all. They're trying to get as many people long and as many people short as they can right at yesterday's high. So they can squeeze one side or to other and get some momentum. So I would now describe myself as neutral, no longer trusting the gap and go until I see some information to confirm it. I got to see those ticks hold the 0 line, or I got to see these icebergs disappear. It's so choppy, so very choppy. It is sloppy how it chops all around. Kirk says, do you use the MBO bundle for stops and icebergs? I don't remember what the different bundles are called. But yeah, I have the full, whatever the full one is, where you get everything. And that is the stops and icebergs add-on. Fighter Pod says, Charles will teach you how to think about the market with trades that fit your personality. Get after it. Thank you, sir. That's what we're all about here. I will teach you how I trade. I will teach you how I enter trades and how I decide when to enter trades and what trades to enter. But I don't really think that'll help you. What's more important is I will teach you how to think like a trader. how to learn to understand what the market is doing, and then how to create setups that fit your personality within that market behavior. So right now, there are some traders who should be flat because we had bullish signals and those bullish signals are disappearing. So they should just be neutral. There's some traders who are thinking they should be short right now because they can put their stop above today's current high, and they can assume the more time and the more volume that we bring in inside yesterday's range, the more likely we're going to get a pullback down towards yesterday's POC. And there are some traders who should be long right now because they got the gap and go, and it hasn't broken the low from that first gap fill yet. So they should be long until that low breaks. I mean, the same market generated information can give multiple different trade setups. Those trade setups all have probabilities of working or not working. And so you're playing your setups, your probabilities. What do you do that works? If your thing is on gap days, you look for the market to get above the overnight high and then you short with a stop above the current high, you should be short right now. If your thing is you wait for the gap to fill, you go long on the gap fill, and then you put your stop below the low, you should be long right now. If you're a discretionary trader who uses your discretion in the moment, you should be flat right now, right? What is your edge? How do you trade? What is the setup you take every time? And you say to me, you say, Charles, that is so confusing. You could be long, short, or flat right now. And I say, yes. And as soon as you figure out which one works best for you, you'll be profitable. All of this and more in the Markets and Minds workshop. Okay, so the market just created what we call a poor low. That increases the odds that the B period is going to break the A period low. We would expect it to first push back up into resistance, but that likely that resistance will hold and come back down and break the low. If we do that, it starts to become bearish, right? The more time and the more volume we bring in inside yesterday's range, the less bullish it is. So seeing that poor low is bearish to see. I still think it's going to be choppy, though, because we got these icebergs up here. Okay, so there's that repair of the poor low. That is a little bit bearish to see. The market is telling us they don't have the buyers to keep the momentum going higher this morning. When the market doesn't have buyers, it's like when a store is trying to sell a product and there's nobody that wants to buy it. What do they have to do to get people to buy that product? They got to put it on sale. They got to put it on discount. And then they can convince people to buy it because it's cheap. That discount is getting back down to yesterday's potential support levels. Closing price, POC, large nodes. NQ still on a gap and chop. We got 122 people hanging out, 57 likes. Please smash that like and subscribe. New animations in the house. What up, y'all? Okay, so what is happening right now on the ES is what we call a liquidation. The ES broke the low, and now it's very quickly dropping. Boom, 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 rapidly. Why is that happening? Because they are squeezing all the buyers, all the people that were going long, they had their stops in here. We are also now squeezing any overnight traders, right? Imagine anyone from the overnight who went long, basically, above yesterday's closing price. Every time, tick the market goes lower, they're losing money. So they're all exiting at once. So a liquidation break, whilst it seems very scary because it happens so quickly and it goes so far so fast, is actually bullish, as crazy as it seems. A lot of times a liquidation break will strengthen a market, because you squeeze out the weak hand buyers and you give those discount shoppers who waited for, Prime Day, they waited for the Labor Day sale where they're going to get on discount, those stronger hand buyers step in. So now once again, I'm looking to see, do buyers step in? So I'm going to click back and take another look at the ticks. Do we have those discount shoppers or not? Design Knob says YM completely crapped the bed. Well, a liquidation often affects all the markets at once. But now we're watching to see, do these new buyers step in? Once again, can they turn 54.92 into support and hold it this time? If not, we're pulling back down to the lows again. If so, we're heading back through the opening price again. Can they hold it? Okay. Boy, this is a fun one. So they failed to hold the support at the previous day's high again. And we have a low volume low, increasing the odds that we need to come back down and test the lows once again. So I would now describe myself as bearish as long as we stay below this node right here between 54.92 and 54.95. Okay? The problem with a market like this is the buyers keep buying, but they're getting nothing for it. They can't seem to get back through that opening price. So they're setting themselves up to get squeezed. So I am bearish as long as we stay below this node, but I do think it's going to be choppy. I think we're going to come back for the lows and then come back for resistance and come back for the lows and come back for resistance and so on and so forth. So bearish below 95. As a look above and fail of the previous day's range. I'm also going to go ahead and switch back to 4-tick increments, as I think we're set up for a little volatility here. And that'll give me some more clarity in reading it. No, I took that back. I can be in 2. Fig Newton, you're welcome kindly. Okay, so now this new drop that just happened in the B period right here, because it happened the same way as the drop before, a liquidation will likely retrace, just like the one before. So I think we're set up for a choppy sideways day inside yesterday's range. I will note, looking at the longer time frame, remember this morning we were saying the inside day yesterday increased the odds that the market was either going to continue lower today, that was just one day of cooling off, or we were going to be set up to go sideways at lower prices for a little bit. To me, I now believe we're doing that sideways. It might just be for one more day. Today might be the last sideways day, but I believe that's what we're doing. I don't think the market wants to make new lows below last week's low. I think we want to trade inside yesterday's range and just balance with time. And that is because we got the gap up in the morning. So I think we're going to be looking at a choppy sideways day inside yesterday's range. If the momentum to the downside continues into the C and D period, we can look to test yesterday's lows. But much like we looked above and failed yesterday's high this morning, I think if this afternoon we look below yesterday's low, we'll reverse and come right back up. So looking for a choppy sideways day inside yesterday's range. It shall be choppy, very choppy. Design now. Call housekeeping. We need new sheets, folks. Someone ished the bed. All right, ticks are showing new selling. That tells me the highest probabilities that the market wants to head down to yesterday's point of control, around 54.67. There will likely be buyers there. There were buyers there in the overnight last night, and it was a fair price to do business yesterday. So I'll be looking for a bounce there once again. And then we'll be getting into the C period, and I'll be paying very close attention to whether this momentum down continues into the C period or not. I lost like 30 viewers when I stopped talking. But unfortunately, at this point, there's not a lot to say. Okay. Bigger picture. The failure to get the gap and go this morning means we're going sideways inside yesterday's range. There's not a lot to talk about going sideways inside yesterday's range. It's going to go down into support, then it'll flip and come back up into resistance, and then down into support and up into resistance. That's just the nature of it. So if you have any questions, hit me in the chat. Good morning, Pavel. Serenity says, what is the support on the Q? Let's take a look. Well, that first spot where it reversed is the first potential support. That's that large cumulative node at 18,688. But it does look like we're coming back through that now. So the next support to me on the NQ is going to be right around this high volume node from yesterday at 18,652. I would expect to bounce there. And then the time point of control, 18,618. I'd expect to bounce there. And again, it doesn't have to go any lower than that, right? The overnight defended those lows, so that might be it for today. So it'll be kind of a wait and see what happens when we get down there. At this point, to get down there, we will be one time framing because we'll have to do it in the C period. And so can they keep the lower lows? I'm sorry, can they keep the lower highs? And can they keep the ticks below the zero line? As long as they do, they can head down all the way towards yesterday's low, around 18,504. But I wouldn't be confident of it unless we got down near 18,616 and got new selling. I'd need to see a continuation of that momentum to believe it's actually going to continue. Otherwise, my assumption is reversal and sideways. Let's see what happens. Remember, we are now thinking the market wants to balance using time. Balancing using time doesn't mean it has to have large ranges. It just has to go sideways for long periods of time. Okay, so we are now pushing into the first potential resistance above. That is the halfback here at 54.86. And I'm watching those ticks. Do they get smacked down or not? If not, next resistance is 91. Okay, so we just printed the C period. So this level between the current C period high and the A period low, that is what we call a set of single prints that we left behind from the B period. Okay? Right now, there are two ways to look at those single prints. The first is it should be relatively easy for the C period to come back and backfill those single prints. So it should be able to backfill them. If it does, they should become resistance, right, at 54.91. That's where the market should run out of steam and reverse back down. If they can't backfill those single prints, so if the market starts to head lower right now in the C period without backfilling those B period single prints first, that is a sign of momentum to the downside, which increases the odds we will start one time framing later on. So can they fill the singles or not? Right now, it's a looking bearish. You guys got to love it. It's sideways with large ranges. Lots of opportunities here. Seven Mile Reach says, did the discount shoppers step in? The ticks are above the zero. So the answer is yes, they did. On the second test of support in the B period, they stepped in, but they couldn't get back, above the previous day's high. So they got nothing for it. And then as soon as the C period started to push lower, they liquidated again. Right? So they stepped in and they were like, yay, we're going to make so much money. And then the C period started to go lower and they were like, oh, fuck. Oh, okay, fuck that. And they got squeezed. So, yeah. It's looking bearish and it's looking like it's going to go very choppy and be a very volatile day, meaning large ranges. Expect quick reversals and then big moves after the reversal to continue until it slows down. So let's say it continues lower. In the C period, D period prints, it continues lower. And then in the E period, it comes back up and it gets cessation. Then you can expect things to cool off. First, you got to see the ranges get tighter and tighter. Then you got to see cessation of the trend. But until then, expect these large volatile ranges like the B period, as that is what the market is giving us right now. Instant reversal, big move. And it will just keep doing that. There's an expression that Jim Dalton uses, traders will do what works until it doesn't. So as long as that's working, the market's going to keep doing it. Caution, Will Robinson. John Q says, do you have a live morning prayer for members? I don't, but that would be a fun, like evergreen video to make for YouTube. Fig says, I wish it would get up near the opening price so I could dive into a short again. I would actually argue if it got up to the opening price now, and again, we're talking about the ES, not the NQ, because the NQ is just kind of chopping through the opening price. If the ES were to get up to the opening price now, it would be a sign that the market's going to rip higher, not lower. I don't think it's going to do that, but essentially the momentum is to the downside. So what that means is there's more sellers than buyers in the market right now. Okay. It would make perfect sense to me for the market to come back up and backfill these single prints. I'd be happy to sell resistance there. I'd be happy to sell resistance near the B period high up here. But if the market got above that B period high, if it got above 54.96, I would no longer want to be a seller. I would not want to be short above that B period high. Why? Because every seller from the last hour, right? Everyone who's gone short anywhere inside this range, they're all getting squeezed above that B period high. Now, that doesn't literally mean every single one has their stop right there, but psychologically, their minds get changed, right? So if the market were to come back up to the opening price now, which again, I don't think it will, but if it did, you wouldn't want to be short there because that's right where it would rip to the upside because it would squeeze all the sellers, right? Remember, it's a two-sided auction. So when people are holding short inventory and the market crosses through a threshold of psychological pain, which that B period high is now that threshold, those shorts become longs because they have to get out of their short. So that creates the momentum up. So again, I don't think that's what's going to happen today. I don't think we're going back to the opening price on the ES. But if it were, I would not want to be a seller. In my humble opinion. All right, so I'd love to hear you guys' opinion, get sort of a feeling from the crowd. What do you think is going to happen? We have a very large initial balance. That is the area from the A period high all the way down to the B period low. So which of the three scenarios do you think is more likely to happen? There's a survey in the chat. Let me know your thoughts. Do you think it's a higher probability we're going to break the initial balance low and begin trending lower? Do you think it's a higher probability we're going to reverse and break the initial balance high, creating momentum up? Or do you think we're going to spend the rest of the day going sideways inside this initial balance? Which of those three scenarios do you think is most likely? Brigade members, don't you let me down. Don't you let me down with this survey. Fig says, what if it wicks up over the open and then closes underneath? I'll dive short in it with price action. Again, yes, that you could do that, but I just don't think that's the more likely scenario to play out. You know what I mean? If they get back, again, we're talking about the ES, not the NQ. If they get above the opening price in the ES, the market's going to go higher because they're going to squeeze the sellers. But yes, technically, if the market were to push up above there and then run out of steam and come right back down, you could short it on the pass back down. But you wouldn't want to have like a limit sell order up there on the way up because it could just break right through. It could break on through to the other side. Let me know in the survey, what do you think is going to happen? Are we going to break the initial balance high, getting above 55.02, or the initial balance low, getting below 54.70? Or are we going to fail to do both and just go sideways? What do you think? $200 says, can I say break the low and then higher? Man, that's funny. I guess it is possible. It is certainly possible. We should look that up. I bet Edgeful can tell us that. Yeah, double break 32% of the time over the last 6 months. We've broken both ends. Only 1% of the time we had no breaks. How many of you have voted for inside the initial balance all day? Boy, the odds are not in your favor. Let's even zoom in a bit more. Let's see if we can do it by weekday and find out what Tuesdays are like. Yeah, it's about the same. So on Tuesdays over the last 6 months, we have never stayed inside the initial balance all day. And 30% of the time we broke both ends. So yeah, I guess I probably should have put a both ends option in there. My bad, y'all. But I guess I'm asking, which do you think we're going to break first? That's a better way to phrase it. Anyone left who wants to vote? Vote now or forever hold your peace. 12 minutes from printing the D period. What do you think? Are we breaking the high? Are we breaking the low? Or are we going to break neither all day long? Thomas says, I just thought we would end in the initial balance. Does Edgeful have that data? I think they do. We do most days, or I wouldn't say most. I would say like half probably close in the initial balance by close. Yeah. Let me see how this data is collected. Okay, yeah, so it's like literally 30, 30, 30. It's almost exactly the same. So 33% of the time we close inside the initial balance, 37% of the time we close between the initial balance and the session's high, and 30% of the time we close between the balance area, or sorry, the initial balance and the daily low. So yeah, those odds are like, to me, 50-50, whether you close in the initial balance or not. And the data confirms it. No edge there in terms of where we close. But of course, we don't need that. We'll pay attention to the momentum intraday and the support and resistance levels. Okay, let's end the survey and find out what the chat thinks. Holy crap. 36% of you said stay inside all day. Obviously, I assume you voted before I showed you the stats that said, in the last 6 months, we've only stayed inside 1% of the time. And on Tuesdays, 0 times we've stayed inside the initial balance, but yet 32% of you think we're doing that. Guys, emotions. Just relax. We know it's going to be a volatile range. We knew it from the B period. You don't have to assume the world is coming to an end just because we don't immediately start trending lower. "44% of you think we're going to break the low." That is what I think. I think we're going to break the low. To me, it seems like we're going to have to wait for the D period, but I do believe we'll break the low. I don't necessarily believe we have to go that far to the downside. As I said, yesterday's fairest price to do business. This area right in here is a great spot for the market to run out of steam, come back up, and get cessation. But if we get new selling, then I'll get even more bearish there. Let's see what happens. You guys crack me up, man. 36% of you think we're going nowhere all day just because we haven't gone anywhere for the last 20 minutes. Oh, it's great. Rick New says, so what are you going to do if we do stay inside the initial balance? Take very few trades. Basically, everything is about probabilities, right? So if I'm bearish, I'm looking for resistance levels to sell, and I'm looking for support levels to take profits. So if we keep coming back up into my resistance levels without getting down to my support levels, I'm going to be stuck in my trade, and eventually I'm going to get stopped out. So at that point, I'll be waiting until I have the next clear opportunity to enter a trade before I can enter. I won't have one inside the initial balance. So the answer would be very few trades would take place. We need to use probabilities to give us an edge. Right now, the edge that is in my favor is that we have momentum down and we have not broken the initial balance, which, as you can see from the stats, is something that we do 99% of the time. We break out of the initial balance 99% of the time, but we haven't done it yet. So that means I should be in a trade to break out of the initial balance. Should I not? It's got good odds. I mean, you could call me crazy. You could say that's crazy. But that's how I see things. Is that a Charlie and the Chocolate Factory reference? Abu says, what about the NQ? Did not get to 18,832. Yeah, the NQ is in a different situation than the ES. Oh, actually, no, I take that back. The NQ is now one time framing lower. So the NQ was just, basically chopping. It was just passing through the opening price again and again and again. So the probabilities were not as good for the NQ. But look at that. It broke the initial balance low here in the C period. So the NQ is now one time framing to the downside. Didn't quite make it to 832, but guess where it's going to go if it keeps one time framing lower? It's going to go on down. Okay. So at this point, when we print the D period in 3 minutes, all the NQ has to do is stay below the C period high. It can turn this into resistance or this into resistance or this into resistance or this into resistance. It can turn any of that into resistance and it is likely to head lower. Okay. Until it makes a higher high on the daily. And that's a higher high based on 30-minute candles. So as long as each 30-minute candle continues to make lower highs, you're likely to push down into the lower end of that overnight range. But it may not happen instantly. That's the thing about trading. You can have a pretty good guess as to what the market is going to do. You cannot time it. You cannot know exactly when it's going to do it. That's where it gets tricky. Oh, it's a band. Oh, my bad, John. Rick New says, does Edgeful show how many times poor highs or lows have been repaired? No, but I should ask them to collect that data. That would be a good one. Okay, so generally speaking, I don't consider the market to be trending lower if we are still inside the initial balance. Generally speaking, I need to see it break the initial balance high or low before the trend starts. But because of the look above and fail of the previous day's high, okay, because we left behind the single prints in the B period, and because the NQ is trending lower, I will now consider this basically the same as a trend. So in my mind, I remain bearish as long as the D period stays below the C period high. It can come up to the C period high. I'll even let it come a half a point above the C period high. But if it gets a full point above the C period high, then the momentum down is over for the day. And that is just because you now have this magnet for the single prints here, which will just instantly pull it back up. So it is not technically trending lower, but that is how I see it. I see it as a trend to the downside. As long as the D low stays below the C low, it is likely to continue to the downside. Once we print the E, if it stays below the D, the F below the E, so on and so forth. It is choppy as can be this morning. But I don't want to lose sight of momentum, which is kind of barely to the downside. John says, on a more serious note, on days when the market is waiting for data, the morning will make the move and then the rest is nonsense, considering it is in a balance, kind of. There it will stay until CPI tomorrow. Yes, I agree with you on that. That when the market is in balance, for whatever reason, it will balance. It will drive you nuts doing exactly this. Moving very quickly and then moving very slowly. And then breaking out of nowhere and then moving very slowly. And like that's what it does. So I agree. You could say it's because of CPI tomorrow. You could say it's because of, the debate tonight. You could say it's just because yesterday we had an inside day. And so the momentum down is over. Balance is balance regardless of why. But absolutely, I agree. Dun dun. Dun dun. Dun 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 dun. All right, moment of truth. The ticks are telling us the buyers are trying to step in. They're trying to reverse the market here. We can see that the ticks are working their way back above the zero line and holding. The momentum is still to the downside with price. Ooh, here we go. But they got to hold the C period high. They've got one more tick. Boy, that is some bot shenanigans right there. Took it right to the level and reversed it to a tick. Okay, so I would feel much more confident being bearish here if they hadn't left behind that iceberg at the high. Right now, the momentum is holding. Okay. Again, technically, the market's not one time framing, but that's how we're thinking about it. So the momentum is holding to the downside, but it looks like they will poke up and get, the end of the momentum by getting a full point above the C high because of that iceberg. If that happens, I then become neutral. It's very important for me to be clear about this. Not bullish, just neutral. Because they will likely get to the base of the single prints and then reverse right back down again. Okay? So for now, I remain bearish. If we come back for 54.88, I become neutral and wait for more information. But nothing gets me bullish here because the momentum is still to the downside. But Charles, we want things to work instantly. It's not one of those days. It's a choppy one. I would also say if you happen to have gotten short around that C period high, it would be worthwhile moving your stop a tick below your entry because of these icebergs. Lewis says, how many ticks per letter on the TPO chart? It is 2 ticks per letter, so half a point. So for the market to get what I call cessation of the trend, the end of the momentum, it has to get a full point above the C period high. And they reversed it to a tick exactly where they should. They're trying to squeeze us, guys. All right, there it is. So to me, that makes this no longer as bearish as we got the D period above the C period high. But as I said, it is not bullish. Okay, that would be the wrong way to describe it. The buying that's happening now is just shorts from the lows getting squeezed out of their shorts. Okay, so I would be looking for resistance now at 54.91, which is the base of those single prints down. And then in the node above that, 54.95, resistance as well. Only if the market could get through both of those levels will it start to get bullish. I would say if the market gets above the B period high, you will get a lot of short covering and you'll break the initial balance high. Below that B period high, it looks like they're just going to chop it sideways. And they may do it for hours. But I want to go back and I want to emphasize, whilst we can't time exactly when, the probability that we will break out of the initial balance, either the high or the low, is extremely high. So at some point today, they're going to break the high or the low. They may chop it up in the middle for a few hours first. So you have to take that into account with your trading. You're either going to get in your trade and just wait and let them chop as much as they want, or you're going to wait until the market breaks one way or another and then look for opportunities, right? Wait until it starts to build momentum above the B period high. Look for your long. Wait for it to start to create momentum below the D period low. Look for your short. Or look for the failure at the initial balance high or the initial balance low. So if they get below the initial balance low and they turn around and come back up, you can go long for a trade to the POC. Or if they get above the initial balance high and they come back down, you can go short for a trade back to the POC. Okay? But today is one of those days. Somebody asked this in the question in the chat earlier, what happens if it just stays inside the initial balance? And my answer was there's just not a lot of trades to take because it's very, there's no edge. It's very hard to read. That's what we ended up getting. We've got a sideways choppy day inside the initial balance. It will be very hard to predict where to go long or short, where to put your stop. We got to just let them grind it around for a little bit until we get some more information. Okay. The NQ is still technically one time framing to the downside. So that means that the probability is higher on the NQ that the market will continue lower. Okay. But if they get cessation, if the D period gets above the C period high, then again, it's neutral, it's sideways, it's choppy, it's grindy. Okay. If the NQ gets cessation of the trend and it pushes above the A period high, much like if the ES gets above the B period high, that will cause short covering and you'll get a move to the upside. But that is less likely to happen. Okay. So enjoy the chop. I'm going to call it quits on the live stream for today. I do think we're going to go sideways for a while here. I will be watching 54.91 for resistance and 54.95 for resistance. If either of those hold, then there's nothing for me to do but wait. If the market gets through both of those, well, then I'm starting to look for, can it come back down and turn it into support to break that initial balance high? Okay. But for now, if it holds as resistance, there's just nothing to do but wait. With that, I will say goodbye. Thank you guys very much. If you have not yet, please smash the like button. Da-da-dun-dun. And we will look forward to seeing you tomorrow morning. Thanks a lot, guys. Bye-bye.